is keeping the Aussie dollar up around a 4-year high?
Well, we're at a pretty extreme point in terms of rate differentials, particularly versus the US, but you could say generally versus the developed markets we normally compare ourselves to. So the RBA's been on a fairly unique path. They obviously started hiking this year when no other major central banks are really considering that yet. And they even continued that in the early stages of the Middle East Iran oil shock. So with markets expecting another hike tomorrow, that gap to the rest of the world is really looking more extreme than we've seen for a few years now.
As you say, the RBA had stood out among central banks for moving interest rates higher. Is that going to change if the price of oil remains high because there's no change to supply conditions in the Middle East? Will other central banks' hawkishness push the AUD lower?
Yeah, we think that catch-up story with the rest of the world starting to move to a more hawkish position, that's definitely something that's potential for the next, I would say, 3 to 6 months. I think it does require a fairly sort of subtle outcome here where you actually get oil prices staying up, no resolution in the Strait, but also growth holding up. And it is relatively hard to see how that combination of events is going to play out. We think probably things either break toward resolution in the Strait and somewhat lower oil prices, or if prices do stay high, that's a symptom that people aren't getting the supply that they want. And in that world, there's probably larger negative growth concerns that are starting to come into the mix, and that might stall central banks as well.
You touched on the fact that the Reserve Bank does have another rates decision tomorrow. Financial markets are betting there's an 80% chance it will hike once more, but the board was split last time round. Is there room for the RBA to keep rates on hold in May?
We think that's relatively low probability. You're right that there was a split vote last time, 5-4, but we do think that at that point, really the debate among the board was about timing, not whether they would move or not. So the big case for waiting for the next meeting was about getting a new round of inflation forecast, and that's what we'll have this time. It looks like the board will be, or the staff will be revising that up. So given that this has been a board keen to act when they deliver or see higher inflation and higher inflation forecasts, we think that it is pretty likely that they do move tomorrow.
Okay. As for what this means for the ASX, throughout the Middle East war, Wall Street has been well and truly outperforming the Australian share market. A lot of that, I suppose, is down to AI, but to what extent do you believe Australian investors are more pessimistic than their American peers about how long it will take to reach a meaningful resolution in the Middle East?
Well, there has been a meaningful difference in performance there, as you mentioned, so part of that is the tech piece, and at the global level, we continue to see the CapEx numbers and the trade numbers that relate to the AI cycle in Asia really outperforming expectations even further. In Australia, we have less leverage to that, and at the same time, we have a more inbuilt vulnerability to issues in oil supply because 80 to 90% of our domestic fuel product is imported. So there's definitely a sense that corporates are having to communicate that, and that's being priced in as a cost shock to Australian businesses in particular.
Ben Jarman, thank you.
Thank you.